Welcome to Momentum Monday. Today is December 15th, and Howard is back.
I'm back, baby. What is going on, Ivan? You've been covering for me while I was sick.
Yeah, I tried. The market has been definitely very interesting, very volatile, but we're back to all-time price.
It's been good for you, right?
It's been really good. The market has been really good for everyone.
Yeah,
well, within excluding people who own a lot of software stocks, I guess.
That's me. So I've been in a couple of the wrong stocks. Okay, so let's see what you're seeing.
All right, let me share my screen. Looking at the market Smith charts. This is the S&P 500. We closed the new all-time highs. Look at that tight range consolidation, which was right before that supposedly we signed a trade deal with China. And last week and the week before, we talked about how some of the semiconductor stocks actually were breaking out way before that deal was signed, which to me...
here, Ivan, they've been acting well. Like Apple and semiconductor have been acting like there was never really going to be a trade war.
Yeah, I mean, basically those breakouts for me mean that the market was betting that there would be some form of a deal. I'm not even sure, did they sign a deal or they didn't sign, but the market reacted favorably on Thursday, on Friday, closed at new all-time highs. And what made me a big impression on Friday is that, kind of the semiconductors actually pulled back a little bit after that big move. We saw a huge pullback in the retail sector after Trump tweeted that the 25% tariffs are staying. Like the retail ETF XRT was down almost 2%.
Yeah.
And then in the meantime, all the software stocks that were absolutely demolished in the past couple months, they bounced. IGV, which is the tech software ETF, was up for the day. It was up almost 1%. Definitely outperformed on Friday. And if you look at that ETF, I mean, you couldn't really tell that so many of the software stocks are near that 52-week highs and down 40-50% from their all-time highs. If you're just looking at that ETF.
Yeah, I mean, maybe this is because Microsoft. I don't know what makes up the biggest.
Yeah, Microsoft at all-time highs, but also you have Shopify, which bounced back, set up near above its 50-day moving average, and it just building a new base here with a pivot near 4010, and it's been under.
I've been long forever. It looks pretty unstoppable, obviously, as a platform for e-commerce.
Look at that volume here on the updates. This is huge volume on all the updates. Look at those blue bars. And then on the down days, which are tight range, we see really low volume. This is very constructive price action.
Yeah.
Obviously, people who think Shopify is the only game in town if you want to compete with Amazon.
Well, it's not about competing with Amazon. It's just building your own e-commerce platform.
Yeah.
Amazon, is running into its own, law.
It's unbelievable that as much as we talk about how supposedly the IPO market is broken, we have something like Shopify, which went up 20 times in the past 3 years.
Yeah. There haven't been that many Shopifys though.
Absolutely, yes, but sometimes one like this every 3 years is enough.
Yeah. This has been one of those years where the S&P, owning the S&P has just worked from January 1. January 1 turned out to be the bottom with the government closure and all the nightmare, and just buying the December crash was the right thing to do. Didn't matter what you bought.
Yeah. Well, the market went sideways for a long time. It was like
the summer was too conservative, but it was a good time to be conservative. And in December we had this, end of November we had this boom, which is all about get myself reelected and do whatever it takes to get the markets higher. Big change from last December when I don't know what he was thinking, but he was kind of anti-market thinking. So what anything new look interesting? I mean, what's working? Obviously, financials to me stand out.
Okay. They're one of the sectors. They're doing well, and of course, when you have interest rates, I mean, you couldn't even say that they've been going up, especially with the Federal Reserve keeping interest rates low. So it's kind of really surprising that they've done as well as they've done. And but to me, they're super boring. With the exception of Visa and MasterCard, we had notable breakouts on Friday.
Yeah, I own MasterCard. I've been selling it all year, but that obviously it looks like another breakout.
Yeah, I mean, I don't think anything else in the financial is really sexy. I mean, we have Silicon Valley Bank, which broke out last week with the rest of the market.
Okay, Goldman, PayPal's kind of had a couple interesting acquisitions.
I think if it clears 110, it could be owned for.
Right. What about Goldman? Goldman was looking interesting.
Goldman Sachs, it's definitely breaking out and looking constructively.
But yeah, still well below its all-time highs.
So currently the Federal Reserve is definitely accommodating, very accommodating. And it's not just the Federal Reserve; it's all the central banks around the world are trying to keep interest rates very low. It seems in the U.S. the new policy is to kind of debase the U.S. dollar. We're definitely seeing weakness in the dollar, which is now below its 50-day. It's testing this very important level here, 2650 for UUP for that ETN. So to me, it's very interesting if we see that weakness in the dollar, if it's going to be transferred into strength into gold and gold miners. So we're definitely starting to see them setting up. Granted, gold and the S&P, have got negative correlation, slightly negative correlation. So maybe we need to see a slight pullback in stocks for gold to work, but maybe we don't need to see that. So I'm kind of thinking that early next year we might see some big moves in that space if they really, because it seems like that's the new policy of the government and the Federal Reserve too. They want weak dollar.
Yeah, I mean, cycle-wise, they say that there's like a commodity kind of cycle coming, so it's something to keep an eye on. But right now, with it's all about stocks and the S&P, and I just
I mean, and also earnings season. It's still earnings season. Many retailers are still reporting. Last year, we saw quite a few reports in the software space. Lululemon reported last week. They had another amazing quarter. Yeah. For whatever reason, they pulled back, probably because.
I mean, listen, it's hard to continue to buy. I've been long Lulu, but it's hard to continue to buy these stocks up to 300%, right? Like they're growing at 30%, but they're trading at, I don't know what 50
times. It says P/E ratio 50 times.
It's just hard for me. It doesn't mean that the stock can't double still. It's just hard for me to, even though Lulu's executing perfectly and in a good position, and they're getting further into men's apparel right now. I think it is reading there, it's 21%. I've been talking about Lulu for men for a while now. They're talking about it being 21% of their overall revenue, and they're trying to double that over the next 2 years. That's what I was reading this week. So obviously the dips can be bought. It was a 5% pullback after earnings. People are already buying that dip. It's just a tough market to kind of find your way in, because everything, working, and the stuff that's not working, software, there's been, continual, it's been harder. Although large software companies like Microsoft continue to do well.
Yeah, I mean, I'm thinking that if the reason behind that sell-off in software is really tax loss harvesting, we might see a substantial bounce in coming January. People want to buy back their shares, but definitely they've been hit pretty hard, and there's really no reason to fight those trends unless you really, really understand the industry very well and you have a really long-term horizon. There hasn't been really a reason to just.
Let's go through some of your list, Ivan, and see what you got.
Yeah, absolutely. Here's the latest momentum 50. So we have medical equipment, some semiconductors, of course, biotech. Biotech is the undisputed leader. It has been leading along with semiconductors. It has been leading this market.
Wow.
In the past 2-3 weeks, we saw some incredible moves in biotech, 40, 50, 100%. We saw several acquisitions for amazing premiums, like 200% premiums. And that definitely has helped the risk-on attitude towards this sector. And I remember when on Momentum Monday, we were talking about the possibility of a breakout right here when XBI was setting up near its 200-day moving average around 84, 85. We talked about it to pay attention to this sector, and it had an amazing move after that. Right now it's at 95. So more than 10% later in the ETF, and many stocks have gone up 40, 50%.
Amgen, the poster child, has kind of been the one that's...
yeah, Amgen definitely one of the leaders.
What was that one you just pulled up, Rita?
Oh, it's a new addition to the Momentum 50 list. I like that big breakout here followed by sideways consolidation. Now it seems like it's attempting to start another move higher.
Wow.
And there's so many in the biotech space. I mean, last week I talked about Unicure, which had a big gap here, and it managed to hold the gap for a week. And then on Thursday, Friday, when the general market went up, this one just went loose. And now it's near 74, near its 52-week highs.
Yeah, I followed earlier in the year. Their competitor got bought. They're kind of the only one left in the space.
Exactly. And then many of those biotechs that have doubled and tripled in the past quarter are now, some of them are pulling back. For example, look at this one, Acadia Pharmaceuticals. Big gap a couple weeks ago, now it pulled back to its rising 50-day. So I think if it can clear that high from Friday, it could be bought for a bounce towards 50. And then for a stop, you can use that 50-day here.
Yeah, the poor man biotechs are the medical device companies. IHI is the ETF.
Yeah, exactly. Some incredible
that actually have earnings. They're not going to gap up as much, but you get to play under the healthcare space.
Yeah. There's some very interesting movers in this space. Navarro, which is number one on the Momentum 50 list this week. GMED also keeps making new all-time high. I know this one is your favorite, INSP. Get a big breakout, and now it pulled back to its
spin-off from Medtronic. Actually, it's like a pacemaker for sleep. If you look at Medtronic, just continues.
It seems like that pullback to 70. It's a buying opportunity. I mean, unless it.
The stock, because of the volume, doesn't really mean anything, and the lack of earnings.
Yeah. So MDT also looking very constructively. Seems to be setting up for a potential breakout again.
Yeah, so it looks like healthcare, biotech,
semiconductors, and then there's the occasional new software tech name also doing well. Starbucks is trying to bounce again, and let's take a quick look. You could talk about it last week again. It managed to hold its 200-day. Now it's above its 50, and now it's trying to work on the right side of its new base. It's an amazingly strong company which continues to grow much faster than the S&P. So I wouldn't be surprised if we see it recover. And now I see a lot of people talking about so-called Starbucks of China, which is a much smaller company, which is of course still losing money.
Yeah, stock's done well.
It's already a $7.5 billion company. It's kind of working on a flag here. near 30. I know many people, many momentum traders are looking at it.
Risk is on. I think what we're seeing, Ivan, is like, we at least, we've been wrong a lot this year, obviously individual stocks, but I think directionally we've been right. Being short has not been correct. Being patient, picking your spots, and obviously being on the right side of this trend has been good. The money is flowing. The summer was a little choppy. Select software has been poor, but risk is on. Biotech, healthcare, even if I look at Tesla, I mean, everybody had written this off. The short sellers were having a party halfway through the year, and luckily I didn't get caught up in that hype. This is the poster child for what true fans, in this new era where financials seem to matter less, in this era of obviously Apple and Google are being rewarded for great financials, but in this era of this late long running boom since '08, where we've had the occasional scare, it's a little sloppier, and if people love your products and you build this passionate audience around them, they'll be patient with your stock. So yeah, I'd like to take a look here at Google, Ivan. I mean, everybody's kind of quietly forgotten about it. But I'm happy to see it break out here. It hasn't done anything fancy, and maybe it will never do anything fancy anymore. It's just a cash machine. But continually, after that breakout, kind of hasn't done anything fancy, but sneaking up a little bit every day.
I mean, he has $1 billion market cap. You cannot really expect it to move, 20% in a week.
Really. Yeah, no, I understand, but it's kind of, that breakout was pretty significant. Didn't come on any kind of massive volume though. So maybe, maybe still vulnerable to a weak market, but I remain long. And then Apple also.
Apple and Amazon, definitely the two mega caps that are shining. And then the other two.
Cap now of Apple, 1 point.
Amazon and Facebook not doing as well. Especially Amazon, for whatever reason, I think after they lost that $10 billion government contract to Microsoft, and even before that, they've been just moving sideways.
It's amazing that it is a stock that's only pulled back, that how strong this market is. It has a relative strength rating of 34. It tells you how strong the market's been, where a stock that's basically, flat for the year has a 34 relative strength. So it's been an unforgiving year for mediocrity, and basically, owning the S&P has been the right way to go. It rarely get this type of year where you just kind of trend in the S&P 500 stocks and kind of rotate as nicely as we've done from sector to sector. I think next year it'll be interesting around financials. I think the Schwab acquisition of TD Ameritrade, Ivan, is going to set the stage for a ton more acquisitions. I think they caught everybody off guard, including myself. We were always wondering when they were going to go zero commissions to kind of combat Robinhood. They didn't need to, and turns out they were quite wily in being the first of the big ones to make the move and pick off TD Ameritrade, probably in a move to get them more into the managed money and financial advisor space, kind of control that model, which is a really smart move. So I think, Schwab probably going to be looked back at this year as being, one of the smart moves of all time. In China, like the Noah meets Goldman the Goldman meets Schwab of China, Noah is starting to kind of bottom there. That's a stock that I've owned in the past. But going back to Schwab, I think what you're going to see is the brokers are starting to do well. You got Goldman, JP Morgan, Schwab, Silicon Valley Bank. The banks are doing well. The dollar softening a little bit, which I think is probably overall pretty good for the States. Take some pressure off certain industries. So there's a lot of confidence in the financial sector. I think you're going to see a ton of acquisitions because a lot of these features are going to become commoditized. I think zero commission is going to bring a lot more activity into the market. And there's a lot of ways to monetize that besides just charging commission. So overall, we've kind of run long, Ivan, but I mean, forgetting the headlines, this tape is pretty good.
Yeah, I agree. It's still a market of stocks, as they say, but primarily bullish market of stocks. As we saw Friday, I mean, if the retail sector can drop 2% in one day, as I say, in a bull market, eventually most stocks go up, but they just don't go up at the same time. So we will continue to see those rotations, between sectors.
All right, have a great week. We'll talk to you next week. Thanks, Marcus Smith, for the charts, and we'll see you on the streams.
Yep.